Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In the last video we talked about one company that is on my watch list. This company has been on my radar for quite some time, and yesterday we've gone over just quick details, and then at the end I told you exactly what I'm going to do with that company. We'll do exactly the same today but for different company. So this is another company that I'm really interested in. I want to go over the details of this company first, just very briefly, and then of course I'll tell you at the end what I'm going to do with the company. But before we do that, please make sure that you also basically like the video, subscribe to the channel, as well as of course joining us in the Patreon account if you can, where you get access to all the dividend trackers, as well as the investment Sharia compliant investment ebook, as well as of course the Discord, where you get access to basically a lot of brothers who are actually sharing very good practices, and that is where I share all the buys and sells that I'm making on a daily basis before I actually release those videos. If you can do that, that will be absolutely wonderful. Right, now let's have a look at the company. So this is MSCI. It was one of the companies that are on, it's been on my radar for quite some time. It's very similar to S&P Global and the Moody's. This company deals with a lot of the data analytics side of things. They basically work with a lot of indexes. If you ever have seen some of the ETFs, they do have this name in it. Okay, in the ETFs, mutual funds, and so on. They also have a private asset, basically asset segment, which I actually didn't know much about until I started doing a bit more research about the company. So it's a very interesting company, and is one of those, they have one of those niche markets, if you like. Okay, and it's not something, basically a company that everybody talks about, and I really like it, and I'm going to give you more information about the company in a second. So right now, year to date is actually down, so a flat. Again, one of the reasons why I have been watching it for the last few weeks, and the fact that it's flat right now, I want to see what basically the company has to offer. Right, let's have a look in terms of their earnings. So in 30th of January, they've actually reported their earnings. As you can see, it was a beat in terms of the bottom line. It was a beat in terms of the top line as well. And year data of almost 20% up. So it was up from this time last year. It's basically up from about 20% from there. Organic operating revenue growth of almost 15%, which is amazing. When they say organic, basically that means the company is growing organically rather than actually acquiring other businesses and growing it that way. They have recurring subscriptions, which is, again, one of the reasons I love this company. Revenue was up almost 17%. Asset-based fees up basically almost to 16%. And new recurring subscription sales up about 2%, which is a little bit disappointing, but again, it's up, it's not down. So it means the newer companies are actually joining this company. Organic recurring subscription run rate growth of almost 10%, a retention rate of 93.6%, which is really huge. And now looking at the actual report that they've actually reported, that was Q4 for that. So that was the basically end of the year one. So these are the four segments for this business. So they have the indexes. Okay, so that was up about 18%. That was 18% organic, which is really good. Analytics was up about 10% organic. ESG as well as climate was up about 20%, so 20%, but 15% organic, which is nice. Again, all other private assets basically was also up about 4% organic, and overall 81%, but organically grown. So that means they have recently maybe acquired another business, and for that reason they were up 81%, but organically up about 4%, which is nice. So everything seems perfect here, and I like the fact that recurring subscription revenue is actually counts for a lot in this basically couple of years, and the asset-based fees revenue side of it, because you can see here 2023 is basically in 2022 to 2023 was up from 125 million to 145 million. So it's just like, again, it's up and it's heading the right direction. Now let's have a look at more information. As you can see here, it has 44.1 billion market cap, so it's a large company. Dividend side of things is safe right now. You get 1.13 dividend yield, which is not huge, But again, it's one of those companies that you are relying on the dividends as well as, of course, the price appreciation side of it and the dividend growth as well. 41% in terms of payout ratio, which is not huge, is fine. 16% growth, the latest increase was 16%, which is absolutely huge if you think about it. And the last 5 years, they grew this dividend of 24%. So that's growing very, very fast. And as you can see, from 2013 probably started. Since then, they've been growing every single year massively, which is quite nice. 9 years of doing that, $6.40 is what you get for every share of this company that you own. Right now, it seems undervalued. So the 5-year average is 0.98. It's above that right now, 1.13. So it seems undervalued according to this. In terms of PE, the 5-year PE is 40.9, right? But the right now it's 38.3, so it seems undervalued according to that. And like I've always said to you guys, the financial sector is not, when it doesn't have a lot of PE is always very low because there's a lot of banks and so on. So I don't even use that at all for these companies. In terms of payout, we've already seen 43% right now. Free cash flow payout ratio of 39 as well. Earnings per share is massively growing. So from 2014 it was $2. Right now we're looking at about $14.07, which is absolutely amazing. $14.70. And the free cash flow per share of basically right now from $2.20 to right now $16.40. Now in terms of shares outstanding, it's actually declining, which is absolutely massive. Total sales in the terms of revenue side of things is also growing from $1 billion to right now $2.5 billion in the last 10 years. Return on equity right now is a negative. Return on invested capital 35%, operating margin is 55%, and free cash flow margin of 46%. Now net debt to EBITDA right now we're looking at about 2.45, which is absolutely fine because we're looking for anything below 3%. Now in terms of growth side of things, we're looking at, let's have a look. So about 10%, almost, then 14%, almost 15% there, 14% almost there, 10%, and then so on. So double digits almost every single year. And then for following, in terms of revenue side of it, 12%, 10%, 6%, which is absolutely huge. So basically top line is growing, bottom line is growing. The business actually is very healthy. This business, so overall is heading the right directions. And the next year, in terms, if you look and Seeking Alpha, next year they're expecting the earnings to grow about 14%. After that, for every year for the following 5 years, about 13%. Their price target is basically $620 per share. Right now it's $564. So again, it's almost a buy hold, so it's in between. So that's 2.5. Normally 2 would be a buy, and then a strong buy will be 1. So right now it's in between there. If we go to Morningstar, you can see it's 2 stars right now, so that means it's a little bit expensive. So 16% premium according to them. Their price right now is $480 per share. The company has a wide economic moat, if you think, and the trailing returns are, when this decides to load up, almost to 30% in the last 10 years, which is absolutely huge. Again, as always, like we always said, but the past does not tell us what's going to happen in the future, but it gives us an idea of where we're heading, inshallah. Now, just to check how the company has performed over the last few years, as you can see for the 1 year, so this is the company, this is the S&P 500, and I've added 4 companies that are basically kind of direct competitors, very similar sort of industry. Okay, as you can see, is about 7% for the 1 year. S&P 500 has done about 27%, so underperformed the S&P 500 for the 1 year, and it looks like they actually underperformed the rest of its peers. Now looking at the 3 years, okay, 37, almost at 38%. The S&P is about 30, 38%, 30%, 27. So it's more in line with when it comes to the last 3 years. And the last 5 years is about 214, 81, 120, 120, 90. So it's actually outperformed in the last 5 years. It's actually done way better than the rest of these companies, which is actually nice to see. And of course, that time has been also increasing that dividend. Was it about last 10 years about 20? Was it 24%? Whatever it was. Let's go back and have a quick look while they were doing that. So the total returns includes, of course, the dividend. So that's last 5 years. So last 5 years they've done absolutely amazing. So if we go back last 5 years, a lot of that also includes that 24% dividends inside of things. Now 10 years, if we look at it, 1,240, almost 1,250. That's interesting. And then the rest of the companies have done about 400. Like this company has done absolutely killed it in the last 10 years. Wow, that's absolutely amazing. So yeah, there you have it. That's the company that I wanted to talk about today. In terms of performance, absolutely wonderful. So what am I going to do moving forward? I'm going to show you, first of all, I'm going to give you an average out the valuation. So in terms of Morningstar was 480, Seeking Alpha was 612. Was Morningstar that price? Let's go back. I just want to double check. Yeah, 480. Wow, that's interesting. It's quite low, 614. And then I've used the multiple valuation in $616 per share is what I've got. So if you average that out, you got 500. Let's call it 570. Current price is 564. That's 1% basically up from the difference wise. Now, if you say, okay, I want a margin of safety or 10%. Then of course the $512 per share is where the price should be. If we see some sort of a correction in the market, of course this company will also hit that. Maybe you might hit that target and buy it. If you feel confident enough, you own this stock already, you've been caught basically dollar cost averaging $541 per share is basically also realistic. I'll say 5% for this type of business because there's not a huge risk. But if you start in a new position, sometimes you might want to give yourself as bigger margin of safety just in case. You never know, because remember, all of the information that we're using is kind of prediction. So their valuation is they're using discounted cash flow models based on the past information and what they think the company should do moving forward. So it's an estimation. So you give yourself 10% margin of safety just to be on the safe side. And if you did that, that will be $512 per share. Put that on your brokerage and wait for it to hit that price. If not, just maybe do the 5% or whatever. For me, definitely the 5%, inshallah. I'm going to add it for 541 and then see what happens, inshallah, in the next few months. If it comes back down again to that price, it's not even that far off, okay? So where I want it to be. So inshallah, I will probably start adding this company. I will let you, as always, I will let you know straight away on the Discord as soon as I actually initiate a new position. So yeah, there you have it. That's the company that I wanted to talk about today. As always, please do your own research, find out a bit more information. This is just for entertainment. I'm just giving you an overview. Okay, I'm not even going deep into this company. So if I was to add to my portfolio, I will of course look into the subscriptions, how many companies they work with. Whatever I need to do, I will do it. I will read the entire 10K, 10Qs if I need to, inshallah. Anyway, I'm going to stop the video here. Have a wonderful day. Assalamu Alaikum.